talk about an important financial ratio for stock valuation. Price to book, aka PB ratio. You will learn how to calculate it using Microsoft and Apple as examples. Hey guys, welcome to Individual Investor and welcome to another video on the Financial Ratios series. Before looking at price to book ratio, let's first look at book value. The book value of a company is the closest thing you have to the value of the business as defined in the balance sheet. One way to think about book value is the following. Imagine that you have a business and it goes bankrupt. The company goes out of business and you have to liquidate or sell all of its assets like machinery, factories, office or real estate, patents, trademarks, etc. In that scenario, the book value would be the total worth of all those assets combined. And of course, if the company owes any money or has any debt, then you have to subtract that from the total net assets in the form of liabilities. Okay, let's look at the formula now. The book value can be calculated by looking at the company's balance sheet and taking the total assets and subtracting the total liabilities. One step further, we can now take the book value and divide it by the total number of outstanding shares, and this will give us the book value per share or BVPS. And finally, price to book ratio or PB ratio would be the share price divided by the book value per share. Okay, enough of the theory. Let's get our hands dirty and calculate the PB ratio for Apple and Microsoft. Okay, as usual, I like to have my data organized on a Google Sheet. Link to this Google Sheet is in the description below. Please make sure you make a copy before making any changes. All right, and then here on the right hand side, I have Morningstar. And let's go to Apple first. Okay, perfect. So here we have the quote or the stock price for Apple. I'm gonna grab the ticker from here and paste it onto my Google Sheet. As I showed you in my PE video before, you can actually, instead of having to manually copy paste the stock price from Yahoo Finance or Morningstar, you can actually use the Google Finance functions and get those data points in real time. So in this case, I'm gonna be using Google Finance and we select the ticker. And perfect, there we go. Now that's the outstanding number of shares. They will be located in the financials section under the income statement. Okay, so I'm gonna go to details and let's collapse everything. Okay, perfect. So if you see here right underneath diluted EPS, you can see the basic weighted average shares outstanding. So we're gonna go to actually I want to look at the quarterly, so the latest fiscal quarter, so that we have the most up-to-date data. Perfect, so here we have the basic weighted average shares outstanding is, let me just expand this. Right, over here, Q2 2021, 16.75. And remember to check your units. So here on the top, on the left-hand side, we can see that everything here is in billions. Okay, so this would be 16.75 billion shares. So I'm gonna type here 16.75 75. Okay, so outstanding shares in billion. Now let me show you a little trick here. I wanted to show you first where to get the number of outstanding shares, but you can actually get this data as well from Google Finance using the Google Finance option. So if I were to call the Google Finance option here, so we can type Google Finance and then we select the ticker for Apple and then comma, and then if we put shares in quotation marks, enter, we see here that we get the same number of outstanding shares. This is pretty neat, okay, but I'm gonna stick to the traditional method just for purposes of this example. All right, excellent. Let's look now at the assets. So for the assets, we have to look at the balance sheet. So I'm gonna click on balance sheet over here. And then again, I'm gonna collapse everything here to make it easier to read. And actually, yeah, let's scroll all the way to the right and let's look at the last fiscal quarter. So Q2 2021 for Apple, we can see that the total assets, 337 billion assets, 0.16. So 337.16 billion in assets. And then the total liabilities, 267 billion 0.98 in liabilities. Okay. All right, we're almost done here. Now the book value, if you remember the formula, is simply the total assets minus the total liabilities. All right, so the book value for Apple is $69.18 billion. The book value per share now, we just take that number, the book value, and divide it by the total number of shares. So this will give us a little slice of those assets per share. All right, so 4.13, that's the book value per share. And finally, the price to book ratio is simply the price of the stock, okay, or the price per share over here, 146, over the book value per share, or BVPS, that we just calculated. Perfect. All right, 35.44. Okay, that's the price to book ratio of Apple. Let's do exactly the same for Microsoft now. Okay, the ticker is, as we can see, MSFT. I'm gonna put it here, MSFT. Stock price, all right, we can see there that is 280. Let's use our Google Finance option anyway, which will give us exactly the same number. Perfect. $280.75. Outstanding shares, again, that's in the income statement under financials. So we're gonna go to financials, details view. I'm gonna go to the quarterly financials to get the latest data here. I'm gonna collapse everything. Okay, and just here under diluted EPS, we have the basic weighted average shares outstanding. And we see that 7.54, okay, as of Q3 2021. I'm gonna use that figure. So 7.54 billion. And again, remember, we could use the Google Finance option here you use the ticker, comma, shares, and then you get the total number of outstanding shares. Actually, we need to divide that by 1 billion. And then you see that it's almost the same. All right, total assets and total liabilities. Let's go to the balance sheet. I'm gonna collapse everything. All right, and then we're gonna go to the latest quarter, Q3 2021, total assets, $308.88 billion in assets, 308.88. And then total liabilities, $174.37 billion in liabilities. And just like we did with Apple, book value would be equal to assets, total assets minus total liabilities. Okay, $134.51 billion. That's the book value of Microsoft. And the book value per share, we divide the book value by the outstanding number of shares, all in billion here to keep things consistent. And we have a book value of per share of 70.84. And then finally, price to book ratio would be stock price or price per share over the book value per share. And there we go. We have a price to book ratio of 15.74 for Microsoft. Perfect. That wasn't too hard, was it? Now, what do we know? One thing we know is that for both Microsoft and Apple, that's a very high price to book ratio. If we go on Morningstar again and we go to the technology sector market, okay, portfolio. So here we have basically all the index figures for the technology sector according to Morningstar, and obviously Apple and Microsoft are both categorized as technology companies. We can see here that the price to book ratio, or the average price to book ratio for the index, is 8.52. So both Apple and Microsoft are way above the average of the technology sector index in terms of price to book ratio. Now, most value investors look for companies with price to book ratios of 1.5 or below, maybe sometimes up to 3, or even sometimes up to 5, but that's the maximum really. For both Apple and Microsoft, we're going way above those thresholds. What this means is that investors are putting a lot of value on the continued growth of these two businesses. Something to consider here is that there is a strong element of brand recognition for Apple and for Microsoft. These are two extremely innovative companies. They have been around for a long time. There is probably not a single person on earth who doesn't know what Microsoft and Apple are. So that element of brand recognition and reputation as a business, that is not necessarily captured on paper in the balance sheet and the book value. So that obviously plays an important factor in how the stock is priced and what investors expect of those businesses. Having said that, just because you see a high PB ratio doesn't mean that you have to disqualify that investment opportunity. Or on the flip side, if you see a low PB ratio, that doesn't mean that that's a good stock to buy. Just like I said in my PE video, you have to look at all the financial ratios, plus you have to understand the underlying business in detail before arriving at a final conclusion. What we know based on the analysis of Microsoft and Apple? Well, at least with regards to the price to book ratio, Microsoft's stock is definitely priced more reasonably than Apple with respect to its underlying book value. That's it for now. Thank you guys so much for joining me. Please, if you like this video, don't forget to like and subscribe to show me your support. I will look forward to seeing you next time.